The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, or afternoon, if for those of you that are on the east of the Pacific Coast. My name is Todd Tavener, and I'm the Vice President of Purchasing and Inventory for E.B. Horseman. These webinars are scheduled for a weekly presentation to all members of the user group and are brought to you by the Education Committee. The Education Committee was formed just over a year ago and is intended to allow all user group members to become involved in training opportunities and to further enhance users' knowledge and applications within the system. As you see on your screen, the members of the user group are showing, and any of those members can be contacted anytime if you have inquiries about educational opportunities or want to volunteer to do any sort of presentations. Again, my name is Todd Tavener. I'm the VP of Purchasing and Inventory for E.B. Horseman. E.B. Horseman has 17 locations and 2 consignment. We've been live since March 2003. 180 users approximately, and we do central purchasing with a central distribution center. We have 3 buyers and an expediter, and about 58,000 stocking items that we manage. So the agenda today will cover some very basics. Again, this is a beginner track, so purchasing 101, so we'll be covering replenishment methods. We'll be covering the purchasing system settings and supplier system settings, or supplier settings probably more commonly known as, purchase order generation options and criteria, as well as purchasing versus central purchasing, excuse me, versus location-based, when and why. So just to jump right in, some of the very basic min-max types of purchasing replenishment methods are fixed inventory replenishment, where minimum stock quantities and sorry, I've got something on my screen. There we go. When the minimum stock quantity is reached, more stock is ordered, so the maximum stock is reached. Items identified as min-max are not impacted by lead time, review cycle, service level expectations, or changing usage patterns, and they're managed with the use of item maintenance, fast edit, or pricing service. Again, these are fixed, so that means there are no system managed interactions. It takes data that you manually manipulate, review, and take those pieces of information from the system and set levels which do not dynamically change. Oops. I'm not getting movement, Cheryl. There we go. The next fixed inventory replenishment method is order point and order quantity, or also known as OPOQ. Again, it's a fixed method when order points are and order quantities are specified. Net stock is the driver that changes that denotes the time for replenishment to begin, and the order quantity is the actual quantity that is recommended to order. So again, the net stock drives that. Again, it's not dynamic, so the system adjustments are all done manually by the user. A dynamic inventory replenishment method is up to, that's one of 2 in the very basic purchasing methodologies available and replenishment methods available. It again is used to calculate order point, order quantity, and continually updates through the system usage. Factors that affect it are lead time, safety stock, and so on. Again, economic order quantity is another dynamic method that is used to determine the amount of goods to meet projected demand while minimizing your inventory cost. The original version of the model, demand is assumed to be constant and known. It doesn't handle fluctuations very well. It doesn't handle changing costs of carrying or ordering very well. Again, it's very mathematically defined. I need to pause for a second because the webinar is actually on a timer for some reason. I did not realize that. I'm hoping that I could do that for a second and fix that. Cheryl, are you able to help me out on this at all?
I'm sorry, what has happened?
It's the slideshow is actually on a timer.
Oh, is it going to?
And I can't. Can somebody help me out here on that?
Okay. If you'd like, I could show the PowerPoint from here. Would that make it easier? And you'll just tell me when?
Well, it's actually automatically moving from slide to slide, actually.
Okay.
So it's going faster than I'm speaking.
Okay, just a second.
And I can't get it off to change that. I apologize, everybody.
Okay. Okay, Todd, do you want to pass over presenter rights for me?
Okay, and I'm doing that. Give keyboard and mouse. Is that the function
No,
I use?
there's
Or
one
change
that,
presenter? Oh.
there's one that looks like two computers.
Yeah, I got it. I just made you the presenter there.
Okay, so just give me a moment and I'm going to pull up the presentation from here.
Sorry, everybody. I didn't realize it was on a timer when I had walked through my presentation originally. It actually didn't time like that. I guess I was speaking faster than the slides were moving.
Okay. Sorry, just give me one moment. I'll be right with you. Okay, so which slide would you like me at, Todd?
Keep going. Okay, one more, two more. Okay, next one. Okay, let's just stop there for a second. As I was rushing to complete economic order quantity, oops.
Sorry.
Moved again.
That one?
Yes, so as I was saying, economic order quantity is impacted by your lead time, safety stock, cost of ordering, and carrying costs. So with that being said, it doesn't effectively handle fluctuations in any of those really quickly, and it doesn't effectively change with fluctuations in demand as well. So it's a good tool, but again, it's for very constant and consistent moving items. Next slide, please. Okay, so let's just jump into some of the system settings, and we'll begin there. So as you can see, I've highlighted some key areas, and what we'll do is for the purpose of the presentation, I'll just talk about these, and you can see that they're actually labeled with some numbers. Well, subsequent slides will actually have a little bit more definition to them, so if you choose to print the presentation or look at it later, we can actually see it, see the detail that goes around these particular things. So as you can see, the number one on the list is buyer-specific purchasing. What this setting allows you to do is define buyers for specific suppliers, as the name implies. So in practical application, within your supplier maintenance, you would assign a buyer to a supplier, and then it would allow you to create criteria that would revolve around purchasing requirements generation for a specific buyer only. So in the case of creating PO requirements generation, and we'll look at some of that setting, that screen as we move along in the presentation, it is a definitive way to narrow down what gets bought by who, and then the criteria would allow you to define the when in the more detail. Number two, as you see here with the second arrow down, is actual process multiple requirement types per PO requirements generation. So what that allows you to do is have multiple requirement types. So if you have the necessity to generate specials, directs, non-stocks, back orders all in one generation, this is the setting that would allow you that capability. Again, designed for efficiency. Rather than running multiple PO requirements generations, this allows you to run one. Number three is combined stock, non-stock, and special per supplier. So it goes hand in hand with the ability to create multiple requirement types, but furthermore it allows you to actually create all of those particular requirement types that are noted there, stock, non-stock, and specials, onto one purchase order. Again, giving you the opportunity to be more efficient and effective and manage those requirements more effectively. Lastly, on this particular system setting area, allow save and restore of PO requirements. This allows the user to generate PO requirements, and should the necessity arise, allows them also to save that generation or the work that they've done partway through a generation. So you'll note that right below the number 4, we have a highlighted area which is the actual path or folder that the PO requirements are stored in for retrieval later. That's a necessity if you were going to use this system setting. And one key area to remember is that the user must have access to that same folder. So if you're going to put it in a folder, it needs to be one that your buyer would actually have the ability to reach. That's the main settings that I'm going to touch on this particular screen. If we go to the next slide, please. Okay, so as I said earlier, these are the specific descriptions to revolve around each of those 4 points that I touched on, and I'm going to move past those for now. Again, for the purposes of having this available to use later, that's primarily why I left the descriptors there, if you will. Next slide, please. Okay, and next slide as well. Now, the other setting you'll see here, or area of purchasing system settings, is the group purchasing settings. Again, if you're an organization which has multiple purchasing personnel and multiple locations, there's some tools there that within this area that would allow you to potentially create some efficiency opportunities for your buyers and for your systems, because what it allows you to do effectively is group all your requirements simultaneously, including creating your transfer back orders, including all your net stock requirements for each of your locations in a group purchasing generation. So as you see, the letter A in this case, again, just because the slides will be printed out later potentially, and I just wanted to make these look a little different from the previous. So you'll see auto-generate TBO for group purchasing. So again, TBO in this particular case stands for transfer back order. And the auto-generate means when you're running your PO requirements generation, systematically transfers are created for the quantities and items that are being included in the group of suppliers and product requirements that you've generated. Those particular TBOs, which would show at your PO source location as a back order, and at your receiving branch or your destination location as an in-transit. The second area that I've highlighted, letter B in this case, is your purchase group options. Again, you have the ability to do location purchasing, regional distribution center purchasing, and individual locations. And again, location purchasing means that the system is directed to default to just buying for one location at a time and just look at each location's requirements and so on. The regional distribution center purchasing rolls up requirements of all your locations and your net stock of all those locations and gives you the ability to see the actual leftover amount required to be purchased. So what it does is it looks at what you have on hand in each location and available to come up with a net stock and compares it to the total required amount needed to be purchased, and it does mathematical calculations that says here's the leftover amount that needs to be bought, otherwise move materials from location to location to satisfy your overall company needs. Individual locations gives the ability to actually run your purchasing requirements by supplier and report all the locations requirements and keep them individually segregated. So that being said, if you had a supplier that you were running and you had 20 locations that were in a group, each of those locations would show up in your requirements generation results grouped together and in item ID order. So rather than running the same supplier multiple times, you could run one supplier and show all of your location requirements for your company. Again, it doesn't mean you have to transfer or move them through any other facility. Those can be individual POs by individual location. As you see down below, allow consolidation of requirements across locations. So it actually allows you to move items and group items between locations. So, for example, if you had freight targets that you were trying to meet, you would have the ability here to put two locations requirements together or consolidate their needs. Next slide, please. So, again, the A, B, and C, which kind of gives a little more descriptor of the actual things that I've already discussed. So next slide, please. Okay, so now we'll go into supplier maintenance, and I'll just touch on a few of the key things. As we spoke of earlier, we had some fixed inventory replenishment methods, in that being min-max, and we also had some min-max and OPOQ, or order point, order quantity. But we also had some dynamic replenishment methods as well that take into account things like review cycle and safety stock and lead time. So the idea here is that the system actually works with a hierarchy in many areas. So some hierarchies relate to the item. If there's no detail in the item, then it will move to a supplier level, etc. So it's always handy to have these particular fields populated within your supplier maintenance. So if you're adding new suppliers or you have existing, it's always of value to have these particular highlighted fields. So let's just start with review cycle. And as the name implies, it's the frequency at which you run your scheduled review of your stock requirements. So how often do you run your replenishment requirements for that particular supplier? Because again, your review cycle comes into play in your mathematical calculations when you're looking at dynamic inventory replenishment methods. The review cycle is a period of time which you will need to cover the sales of inventory. The safety stock down below is your target that you're trying to hit. How many days safety stock do you need? Again, it's important in a dynamic replenishment method, inventory replenishment method. Lead time, as you can see when we move up to the right, You'll see item and supplier. So what that dictates is whether your lead time calculations will work from your supplier level or will they work from an item level. Do you want to roll up your supplier average? Maybe you have very differing supplier lead time items. Some items are quick, some items are slow. If you're using supplier, there's a potential there that you're going to get some inaccuracies in your calculations. Whereas by item is very finite and is controllable based upon the number of receipts that you want to utilize in your calculation. So if you do a lot of buying for a particular supplier, or group of suppliers, or your frequency is consistent, then you may want to look at a different number than a situation perhaps where you have less receipts and less history. Another key area that comes into play, while it doesn't involve the calculation of your replenishment quantities, it is important in the overall scheme of the detail and the detail that you actually will see when you're running PO requirements, and that's target values. And target values can be in units and dollars and so on. As well, the freight control value, which is also can be weight, dollars, units, etc. The idea of these two fields, in our application at least, is we look at target value being like a minimum billing that you need to always meet. And of course a freight control value, again dollars, units, weight, etc., will be what we in our application use as a freight allowed level or a prepaid level. So the key with both of those is they interact with your PO requirements generation process. There are warnings. There's information that's available within your PO generation screen that will trigger pop-ups and warnings prior to saving or creating your PO that will either help you ensure that you meet those target values or warn you that that you haven't, but yet allow you to continue on if you choose to. Okay, next let's just move to the next slide. Now we get to a really busy slide here, sorry for that folks, but it's relatively straightforward. So within the PO requirements generation process, which I've spoken of quite a bit thus far, is some very basic areas and some opportunities as well, depending on your experience and what you want to achieve. So beginning at the top, we have a saved purchasing criteria. That criteria allows the user to reuse a criteria. So all of the detail, as you see below our purchasing criteria 44, which is displayed here, is there every time they retrieve 44. So you set these, you save them, you call them whatever you want. As you see, those fields are editable, and the ability to name them whatever you want is there. Again, to be reused in as many as you like. That is also the opportunity, that's where you would put in your information if you were saving the results that you had generated. As we spoke earlier, saving your PO requirements results. You would actually fill in the field in the saved purchasing criteria there, and you would call it whatever you wanted, and you could go back and retrieve it because it would give it an ID number that you could drill into and retrieve later. As we move down, the company ID is there, of course, the buyer ID. So when we spoke earlier of buyer-specific purchasing, this is one of the areas right now that allows us the opportunity to narrow down the purchasing requirements. So at this particular case, when we put our buyer 1003, we're only going to get suppliers that are assigned to that particular buyer by default, because we've set it up in system settings. Again, you will see a little later there are abilities to control that at this stage as well, but for our purposes we do it at system settings as a default. So as we move down, you can see we've highlighted the range of suppliers which can be selected. So when we move down to the supplier ID area, that can be one supplier or it can be a range of suppliers. And again, depending on the method that you use within your organization to assign suppliers and to buyers or buyers to suppliers, whichever you will, now you are only getting the suppliers within that range that are associated with the buyer you select at the top, in this case 1003. So again, it doesn't have to be a buyer that's responsible for supplier 1 to 100. It can be any range of suppliers based on what your business needs are. As we move down to the right where we see requirement types, this is where various requirement types are selected for this particular generation criteria. These can be combined onto one PO if appropriate. Settings are set in the system. Again, as we spoke of earlier, where we're consolidating or combining stock, non-stock, and specials, it will generate all of those within this particular criteria, and it will display the specials on a separate tab, but it does give you the ability to combine them within the supplier summary tab, which you would see after you had done all of your particular editing and changes with the items that were retrieved. It can then, you then have the ability at your supplier summary tab to combine them. Again, depending on what your business needs are, there's abilities to further refine the list of items that will be selected for review. Again, ABC class and product group are both opportunities in this particular case to narrow the results if necessary, because not everybody runs their business exactly the same. This is an opportunity to narrow the focus of what you need, or maybe it's a one-time only situation, or maybe it's an ongoing criteria, or maybe certain product groups have to go to certain supplier locations for order entry or purchase order entry. This is what allows you to perhaps narrow that down. And again, it can be a single product group, as you see in this example, or a range of product groups, or you can leave it open and default it to A to Z or 1 to 99999. It doesn't have to be defined. Right below product group is look-ahead days. Again, that's the number of days in advance that it will be looking at any requirements for purchasing. And again, replenishment method is right below the look-ahead days. That gives the ability for the user to select, maybe there's only one requirement type. If you were to click on the drop-down, and again, for the purposes of this webinar, I didn't highlight every screen, every field within every screen, but ultimately below that replenishment method drop-down, you will see all as a default, but there's min-max, there's EOQ up to order point, order quantity. So if you only had certain items that you were wanting to review based upon that replenishment method, that is feasible as well. So any combination of these fields are available for you to use to narrow the results. If we go to the next slide, again, each of those areas that I had highlighted is described here in a little more detail, so that if you need to go back to it later, it's available. If we go to the next one, and one more, please. Okay, so now you can see that in focus this time is the Factors tab of the PO Requirements Generation area. So based upon my system settings, these are the defaults that appear. And these defaults appear because we, again, define them in our system settings. Again, they're editable, so perhaps somebody is on holidays, or there's some particular reason that you want to override your system setting. You can do that in your Factors tab here on a one-off basis, or maybe your criteria has changed and you can actually deselect or select these fields to allow the criteria to be perhaps updated if necessary. So again, you'll see the auto-generate TBO is on, and again, the auto-generate TBO will take all of your requirements of this purchasing generation and for a group situation and create transfers from the source location to the destination location, and will be awaiting receipt, at which time the allocations will occur and the materials will go. This negates the need to go in and manually generate transfers against a source location, then purchase, then have the receipt. This is all done in one continuous step. Again, it's not for everybody, but it is an opportunity for efficiency. It's an opportunity to perhaps take that work that you've done in min-max review or in your order point, order quantity, or any of your other replenishment methods and maximize that effort by eliminating the need to do the extra steps in the middle. Buyer-specific purchasing, again, we had selected within our system settings, and again, it's just giving you the opportunity here to override it. If we had nothing in the system settings, these fields would be blank, and you could go in each time or in each criteria and set what you needed. For our purposes, we choose to force these fields to be populated based on our company rules and how we like it to work. Again, review non-stock items as source for transfer. That is an area that can be utilized to move surplus inventories and those types of things, which would be probably something that would be a further discussion point or perhaps another webinar for another day. And again, combined stock, non-stock specials, same thing applies. And you'll see down below under system settings is process multiple requirement types per PO generation. That one is grayed out, as you can see, because it has underlying rules, I guess, that ultimately it's not wise to change from your system settings. If you chose that you wanted to change the rules, then you would do it at system settings and save, and the next time you log in, it'd be available to you. We'll move to the next slide, please. Okay, so just a couple things, as I said earlier, we'll touch on maybe the central purchasing versus a location-based purchasing program. Again, location-based allows you to run location by location as required, buy directly into it. Central purchasing can be as simple as multiple people sitting in one central location or a person in a central location that does all replenishment, or it could be a distribution center model or multiple distribution center model that actually moves inventory through it for you and all materials are bought into. Or it could even be a hub and spoke kind of arrangement where you just move inventory through a key location or multiple key locations. So some of the considerations that you may want to take into account when doing that would be the cost of the product that you're moving between your locations or through your location. Geography. Perhaps you have internal geography where your locations are very spread or very diverse. You maybe have external geography where the distance of your material from your actual sales locations or your distribution center are. And ultimately, looking at the geographical nature of your business, maybe there's reasons to move it to one location and then use your own internal processes, whether it be your own trucks or common carrier, etc., because it's maybe more efficient to maximize your purchasing efforts into one place. Maybe you have the necessity, I guess, to look at your number of invoices and your billing that's provided by your suppliers. Perhaps you're spending a lot of time in an accounts payable role, processing many small invoice amounts for many locations. There's perhaps opportunity there to consolidate and deal with one invoice for the same number of POs, or same number of quantity, I guess, or the same quantity of items. You have freight concerns, so again, potentially consolidating freight is an opportunity versus a location-based model, which of course has freight demands for each of those locations or each of those POs that you're cutting. Staffing resources. We found that when we moved and looked at a central purchasing model, it gave us the ability to review our purchasing requirements in multiple locations, perhaps redeploy people into a sales role versus just creating purchase orders and manually generating requirements. It gave us the ability to take AP people and make them more productive because, again, we're consolidating invoices, we're consolidating their efforts. The number of calls, the number of lines on a statement, all of those things were opportunities we found. Inventory value reduction opportunities. Again, for us, we have a central distribution center, as I said earlier in the presentation. We found the ability to reduce that excess inventory in multiple locations. Through the use of our distribution center, we were able to reduce from approximately 6 or 8 weeks stock in many locations to 3 to 4 weeks. So therefore, we saw an immediate reduction in cost of holding inventory, the volume of inventory sitting in a location. In some cases, even the physical space requirement in some locations. We were able to do the same business with a smaller footprint. Considerations that you may also have when looking at your purchasing program, and some opportunities to use the PO requirement tools and the central versus location-based model would be things like customer service. Do you have an opportunity to improve your customer service because you're looking at your overall company requirements and you know what you need, where it is, and product activity in certain locations. You're seeing those products move through a central distribution point. You have the ability for standardization in some cases, because I know we found that many locations were generating orders for items that perhaps were unique to them but very common in another location, in a different supplier perhaps. So again, you have the opportunity now to consolidate those things and see them in one place by somebody that perhaps can use their experience to offer your branches some standardization, maybe a product that is already stocked within your company even. Again, as I said earlier, invoice reductions was an immediate thing we found when moving from a location-based system to a more central. And again, fill rate improvements as well, because again, you're utilizing the tools in which you have in front of you, so you're using your replenishment methods effectively in each of your locations. So whether, even if it's a simple min-max, you're able to have somebody look at those requirements, generate them centrally, and ensure that materials are being ordered, as opposed to the potential opportunity within a branch location where those decisions are getting made when somebody gets time to get to it, or it's maybe not somebody's full-time job, so sometimes materials don't get ordered on time, or they don't get those requirements don't get generated maybe from a hub or a central when they need to be, and therefore your inventory fill rates may be affected. And there's probably other opportunities as well that I've probably not spoken of. So that's the basics of what I had to present today. Again, I apologize to everybody for the slight technical glitch we had near the beginning. I do appreciate Cheryl's help in keeping me on track. And I guess it's an opportunity, if there's any questions that might exist from anybody at this point, or if I went too fast, perhaps we can go back and recap if there's any questions.
So Todd, if you don't mind, while we give everyone an opportunity to put their questions in, I just wanted to remind everyone that next week, June the 9th, our webinar will be on wireless warehouse, being hosted from Ronnie Harrell and Renee Savage. The week after, June 16th, we're pleased to have Using Bartending labeling program, and that's going to be with Ron Tomlinson. So we're thrilled to have those to offer. We do have one question, Todd, when you're ready.
Sure. Okay, go ahead.
If EOQ does not handle quantity fluctuations well, and you did not want to fix the order point, is there a better opportunity than EOQ?
Okay. Well, there is functionality within the Profit 21 product that allows for a more robust review, I guess, of your product movement and activity. It's fairly entailed, and it would go probably beyond the Purchasing 101 class, but it's called Advanced Demand Forecasting, which does take into account many more factors and accounts for those fluctuations and some standard deviations and things in your activities. And it is a dynamic method, but it's not. It probably doesn't address the order cost and those type of things the way you perhaps would want it to. It's again generally based on product activity and movement, and it's an area that I strive to start to develop within my organization. So I'm not probably the best person to speak exactly to the advanced demand forecasting. If you're depending on the number of items you have and so on, that would be affected. Perhaps one of the perhaps the up to or something like that may be a more suitable method to look at those items if you're not concerned about the cost of ordering and material cost.
Okay, the next question is, at what point do the dynamic purchasing criteria get updated? Month end, PO receipt, etc.
Okay. Well, the within Profit 21, there's a necessity at the last day of every month to update your demand history. So that demand history meaning what your actual product activity was for the period of time that you've just completed. That demand history performs some calculations as well. It comes up with some actual usages, some filtered usages. There's some formulas there that get updated. So your demand history is what identifies what's happened in this last period, but also each of the previous months as you've updated them, the history has been calculated as well. So it uses the history moving from the most current period going back to achieve a recommended quantity and a forecast looking forward. The advanced demand forecasting also relies upon that demand history update as well in a slightly different method, but it does require that same update. And that can be found in the inventory module in transaction, I believe it is. But it is a key area to update because it does also impact what you see in your PO requirements generation screens as well, because there are some flags and things that will appear when you're utilizing that demand history, which will kind of give you some triggers or perhaps some heads up when there's you may be running short of product and so on, even if you aren't on an actual dynamic inventory replenishment method. Hopefully that answers your question.
Well, the next question we have is, have you developed a method to measure actual fill rates since Profit 21 only does hits?
We have not developed one necessarily. What we generally look at is try to use, and I know it's not a perfect methodology, but we look at our in-stock percentages currently. So we look at our A, B, C, D, and E items, and we've actually created some parameters that we use as targets. So we look at available stock in each of those ABC classes. So each one has an objective, if you will. So while it's not perfect, we found that it's been a reasonable alternative for us to measure. And with that, again, we've done it outside the system using Microsoft Access. But it gives us a report every morning that kind of shows our buyers where they stand based on each of the ABC classes, as well as the ability to see the items that may be suspect if there are issues in those percentages or are low. Okay.
Okay, the next one is, how do you determine items that are approaching a danger level when the majority of the review cycles are based upon the supplier? Some people may call it a demand action report.
Whew. That is a very good question. And now we're going beyond purchasing 101. Could you restate that question one more time for me, please?
Sure. How do
Thank
you
you.
determine items that are approaching a danger level when the majority of the review cycles are based upon supplier? Some people may call it a demand action report.
Okay. So again, that in-stock percentage report that we've created would be the tool probably that would as closely address that as I think would exist. There are definite tools within P21 PO requirements generation that do give you some of that information, but it's not until you run the generation that you would see it. So ultimately, I guess we're using an external report, again, our in-stock percentage report, to kind of trigger the need to take some sort of more immediate action. And again, we base it upon some preset parameters that we use, as a objective by ABC class. So, for example, A items, we would have a 99 or 98% available expectation, or say 99, and subsequently B, C, D, E items would each have their own available based on how we've deemed the importance, I guess. And again, that report runs on a schedule every night. Buyers see it every morning based upon where they are from the previous day.
I have two comments, actually. The first one is, can we ask everyone interested to request a fill rate feature to be added to Profit 21? And Michael Dean just wanted to share that the way we create transfers from data arising from POGen is very search intensive and very manual with many steps. Please review the automatic transfer backorder function from system settings to POGen to create transfer.
Okay. Yeah, within the other comment as well, just going back to the situation where the question, I guess, revolved around how do you know when to buy something. Again, within the PO requirements generation screen, an icon, if you will, with a little C in it would show up actually on the left-hand side beside each item that would be considered critically low. Again, you don't see that till you run the requirements, so there's nothing that happens until you run requirements, and depending on the number of suppliers and the volume of items potentially that you would have to review, there is no driver per se that will give you that unless you do go running and looking specifically for it. I'm not sure if there's any other questions or...
There are no other questions at this time. Is there anything else that you wanted to add?
No, I guess I would lastly, like to thank everybody for attending, and I'm not sure if we had any dropouts over the course of the hour. I'm sure we must have. But again, I do appreciate everybody's attendance, and feel free to contact me if you have any questions or if I wasn't clear with anything that I may have gone through today.
Well, thank you very much, Todd, for presenting Purchasing 101 today, and you had an outstanding attendance, so that was great. Just to remind everyone, next week we have Wireless Warehouse, that's June the 9th. The week after we have Using Bartending, and that's June the 16th, and the invitations will be coming out shortly, so just watch the list for them. And if there are no other questions, we will wrap up for today. So everyone enjoy the rest of their afternoon, or morning, sorry, Todd.
It's okay, it's only 5 more minutes. Thank you.
Goodbye, everyone.